Hey, good morning, everyone. Jeff Dorman and Nick Hotz back for our monthly crypto market call. For those who are new to this, we've been doing this every month for most of the last year. And the goal here was really to dive a little deeper into what's happening in the digital asset markets. I think when we first started our funds over 6 years ago, most investors were pretty new, including us, to this space, and really wanted more higher level overviews. But as we have grown as an industry and as investors have matured with their knowledge set, there's been a little bit of demand to go a little deeper into specifics of what's really driving markets, sourcing some resources that we're using, try to be a little bit more in depth and maybe in the weeds on what's happening in the digital asset market. So we'll get started here and kind of go through what we're seeing in the market right now over the last month or so in a second. But before we start, as always, quick disclaimer. This commentary is provided as general information only and is in no way intended as investment advice. You can read the rest on the screen here. So as always, I'm Jeff Dorman, Chief Investment Officer of Arca, joined by Nick Hotz, one of the research analysts at Arca. Kind of an interesting month here, Nick, right? I think probably, in my opinion, one of the most mispriced ever in terms of price action versus narrative. And what I mean by that is certainly a lot more volatility in the second quarter. April straight down, May straight up, June straight down. But what to me was interesting was that May was probably the most positive shift ever in terms of the US regulatory landscape. Um, and heading into the fact that you had an Ethereum ETF being approved, you had certain changes at the SEC and even in the Congress level. You had a lot of macro tailwinds. Pretty surprised by the price action in June. I would say that.
Yeah, definitely. I mean, it's crazy on ETH to have retraced that entire gain that was made on that one day when you had that massive pivot in Washington. So yeah, I mean the market has completely discounted all of that positivity.
So yeah, so looking at the first slide here, you mentioned the Ethereum ETF. It seemed like the market got way more excited about the Bitcoin ETF than the ETH ETF.
Yeah, I mean you get that 3 month run up prior to even the approval of the Bitcoin ETF, and then you kind of had the extension of the bull market keep going after people were or underestimating the amount of inflows that you were going to get from the ETFs, and it was actually a lot more positive than people thought, a lot more quickly. But if you go to the next slide, I mean, you see how the market has performed for ETH in the 3 months. Assuming we get an ETF here sometime in the next few weeks, it's been much more flat, kind of choppy. You've had some surveys just going around recently of what the expectations are for inflows coming from the ETH ETF, and people have been throwing around the number like 10 to 20, 30%. So obviously not quite as impactful, but ETH is a much smaller asset. So yeah, interesting to see that divergence for sure.
Yeah, and I would say, I've been on record on this multiple times here, but I think if you ask just any normal non-crypto native investor, hey, where would you expect ETH to be if you had a complete surprise ETF announcement in the middle of May, where basically it was being priced in, and I'm not going to say 0%, but maybe 3 to 5% chance of an Ethereum ETF happening. And then basically overnight, those odds went to 75%, and then the next day 100%. I would think with just that information alone and nothing else, most investors would think Ethereum would be higher. But the fact that, at least as of a couple of days ago, before a little bit of a rally here, Ethereum was down as much as 5, if not 10% below where it was before that surprise announcement. Um, I would say that's pretty shocking.
Yeah, I don't disagree.
Well, and I think it shows on the next slide here that um, those that don't follow the crypto market as carefully, those who are trading in crypto equities, apparently think the same way I do, right? Again, if you're not on crypto Twitter every day and you're not miserable watching VC unlocks and people yelling at each other, and you're just objectively saying, hey, equities are at all-time highs, rates are starting to come in, CPI is light, Fed's probably going to cut rates, we got Republicans taking over Congress and probably the presidential election. Oh, and there's this Ethereum ETF coming and Bitcoin ETF flows are pretty strong. you'd probably be a buyer. And that's what we're seeing. What is this chart showing here with regard to the equities versus tokens?
Yeah, I mean the bear market has definitely started for somebody who's loosely following crypto a lot more recently than it has for people who are deep in the weeds. I've got here just some of the different crypto equities. I've got the in green Iris Energy that has been a huge outperformer, one of the miners. The BKCH, that's the mining index as well. You can see that being the second highest. The other two more crypto equities, but then below you've got the indexes of the actual tokens, and those have suffered pretty badly here in June and into July. So it's really been a complete decorrelation between the two.
Yeah, and going to the next slide, you can see that even more pronounced here. I think, sometimes the charts we use are more out of what's available versus, maybe the best representation here. But just looking at Bitcoin versus the Nasdaq, you can see a pretty stark negative correlation here, and not something that well, actually, when I look at this chart, the first thing I think of is, well, this is why crypto is an uncorrelated asset class, because while it sometimes has a high correlation and sometimes a no correlation, sometimes a negative correlation, that's the definition of uncorrelated, right? You have these spurious relationships that never really track over longer periods of time. But still, to see that sharp of a negative correlation, I think definitely took investors off sides, and again, pretty big disconnection between price and what we're seeing in the markets.
Yeah, nothing to add. I mean, I think it's the supply pressure, and I think we'll get into that in a little bit.
Okay. So on the next slide here, we mentioned crypto Twitter, a pretty negative place right now relative to what's happening in global markets. And kind of a reminder of, most investors are not 100% into anything, let alone crypto. Most investors had a pretty good second quarter. They made money on their stocks, bonds, especially if you into higher yielding stuff, did pretty well. Maybe commodities got hurt a little bit, but most well-rounded investors probably did pretty well in second quarter. Crypto investors, not the case. Sentiment pretty awful, I would say. Is that what we're showing here?
Yeah, and kind of goes back to what I was saying. I mean, this index, maybe it's more Bitcoin heavy, but really not breaking down until just pretty recently in the last month or so. Well, many of the alts were bleeding pretty badly. But now, yeah, I mean, now you're dropped below kind of the levels from January 2023, which was the kind of the when people realized that the bear market was over. So you're below those levels. Sentiment is really bad right now.
Yeah, I mean, historically, when sentiment gets this bad, it is generally a buying opportunity. Not always. I mean, sometimes it stays this way for a while, but certainly when you see these fast corrections like this, it's usually a sign of capitulation. So we'll see. Again, we're seeing a little bit of strength the last couple of days here. We'll see if that makes its way into markets. But let's talk on the next two slides here, Nick. I mean, tell me, this is something that I know you've talked about a lot, the lack of breadth in the market, the degree to which overall indices are maybe skewing what's actually happening beneath the hood.
Yeah, so this is just in the equity market here. Got a chart of the S&P 500 versus the small cap index. You could take this across any, you could take it on equal weight. You could take it on on the Russell 2000, whatever. It all pretty much shows the same thing, that it's been just a few stocks that have been holding up the entire index. I think this is a pretty well played out narrative in markets, that it's been the Mag 7, the Nvidias, the Microsofts, Apples, really holding up the index on account of the expectations of what AI is going to do. And so we see that kind of in spades in the equity market, where there's this huge divergence in performance. And if you go on to the next slide, you're also seeing that in crypto, maybe not due to AI, but if you look at the total index, which is the market cap weighted index of all the tokens, versus the equal weighted index in orange, just another huge divergence, over 40% divergence in terms of performance on the year.
Yeah, it's certainly a little concerning, the higher concentration in returns coming from a small basket of large caps. It's sort of, I guess that would be, in my opinion, where some of the correlation is coming up in the macro realm, given that, the reason for rate cuts is generally not a great thing for the economy. You're starting to see unemployment tick up and jobless rates tick up at the same time that you're seeing a little bit of disinflation. Not great for middle America and certainly middle parts of the world, but good for the biggest, largest companies that can take advantage of economies of scale and have better pricing control. So, maybe that's what we're seeing in the equity market. Maybe, in some weird kind of way spilling over into the digital asset market as well. But heading to the next slide here, what I think is really interesting and maybe the meat of what has been happening over the last couple of weeks is you're having these really big supply shocks, near-term supply shocks in the crypto market. Again, we talked about sort of a healthy backdrop um, in the overall market, but you have a real near-term kind of negative sentiment, and it's largely driven by the 10-year-old Japanese bankruptcy Mt. Gox that is now starting to distribute up to $9 billion in Bitcoin and Bitcoin Cash back to the market. Uh, one of those situations where the actual selling pressure is not even close to how much the market is front running the fear of that selling pressure, given that this is going to be a distribution over 2 years and that a majority of this Bitcoin that is coming back was already pre-sold as distressed investors bought the claims and then hedged out the actual Bitcoin. But then, of course, we have the German government selling a fair amount of Bitcoin as well, up to 3 billion. Pretty sloppy seller, actually, especially over a holiday shortened week like last week, but from some seized assets that they had. So this graph here, I guess, showing that pretty profoundly, right? The difference in, I would say, what the blue line there is US, the purple is the EU, and the yellow is APAC. Obviously, selling pressure can come from anywhere, but the fact that this has really just been consistently coming from outside the US. Meanwhile, we have actually pretty good ETF inflows in the US, offsetting really heavy selling pressure out of Europe and Asia. I don't know about you, Nick. I don't know if you watch this as carefully as maybe I do and some of our traders, but this has been rare. I mean, you got to go back to 2019, really the last time Asia was dominating flows like this.
Yeah, not quite as closely. It is pretty crazy the difference. Especially just coming out of, as you said, Mt. Gox, where a lot of that is going to be taken out over time. That the selling pressure would be that heavy in that environment or in that session.
Yeah, and really, I mean, like there were times when Asia dominated crypto trading again back in 2019, even a little 2020, but it's been a long time. Certainly never it's been driven out of Europe like this before. So maybe it also shows just the summer months and the lack of liquidity overall in the market that just, one big seller or even just one big focal point can really just dominate um, the sessions. So let's get
I'd
into
be
a
curious
little.
on your take on this one on the FTX assets going maybe in the other direction, coming out with cash distribution.
Yeah, I mean, my general sense on this stuff is, I've said this before, but almost any time there's a supply shock in general, the market misinterprets it, right? I mean, you can go whether you're talking about fixed income markets, equity markets, if you know there's a known seller, 3 to 10 times the amount that's actually being sold ends up being sold ahead of time just to clear up room. And then ultimately people look like, I did this at credit and equity hedge funds, be like, oh, there's, BlackRock is a big seller of a couple $100 million, so let's go sell $20 million worth of risk to go buy it. And then we sit there with our hands open, like, okay, ready to buy it. And then I find out that someone else bought it and I didn't get it. And then I have to go chase the market back higher. And every fund does that, right? So you're seeing definitely a lot of that on the supply side is way more selling than there actually is coins to gobble up. And then you end up having to chase it back higher. But on the flip side to your mention about FTX, that's a pretty big tailwind is that, if you were trading on FTX, presumably, even though you probably got hurt a little bit, presumably you're pretty bullish on crypto. And the fact that you're getting a massive distribution as early as this year, unlike the Mt. Gox distribution, which is all in Bitcoin and Bitcoin Cash, the FTX distribution is all going to be in dollars. I would imagine a majority of that makes its way back into crypto. I would also say a majority of the Bitcoin from Mt. Gox probably ends up back into crypto in the sense that if you look at the wallets that were given out in the bankruptcy filings, they're almost all exchange wallets. So if you wanted to cash out completely, you wouldn't be sending it to an exchange. You would have either sold your claim already, um, or probably found a different place than Binance to get your dollars out, right? So the fact that these are going back into the exchanges probably means you're going to swap your Bitcoin into something else. So I think there could be some real demand pressures as a result of some of these distributions, especially as you mentioned with FTX at the end of the year.
Yeah, that makes sense.
So let's get into more of the crypto nitty gritty here. Real things that you're seeing across different sectors, different areas of the market. What are some of the takeaways in terms of sectors and or specific digital asset themes?
Yeah, I mean it's obviously been a tough quarter. And it's really been tough for some of the sectors that were doing the best in Q4 and Q1. I mean, you look at across the right side here, it's AI, it's gaming, it's real world assets, things that had done really well. I mean, the notable diverger is kind of L2s, which have been a perennial laggard this cycle. And then if you go over on the left, it's centralized exchanges, privacy coins, meme coins. I mean, not stuff that had been doing particularly well up until pretty recently. Now just absolutely, well, I mean, relative outperformers at least.
Yeah, and I mean, you see this a lot even in bull markets like 20 and 21. You do see a sector rotation, but it's rare to see so many different sectors going the same direction, I guess. I think that's be the takeaway for me. Like even if you go back to early 2021, you had DeFi was the January winner while others were losers, but then it reversed in February and DeFi gave some gains back while Web3 was going higher. And then in March of 21, you had gaming and NFTs kind of take over. And then, in April, it was meme coins. Like you had this back and forth. This is just pretty much everything giving back the gains all at once and really no discrimination at all between sectors.
Yeah.
So with that in mind, I mean, going to the next slide here, how much of that is due to just too many tokens and too much inflation and supply pressure?
Potentially a fair amount. I've got a chart here showing the differences in the token unlocks when the token launched for some coins that launched, a while ago, and then the ones that have launched a bit more recently in 2022 and later. And you can just see across some of the major launches, you're looking at an average here of maybe 10% recently of the tokens versus probably 20-ish for the more distant past launches. So just the overall dynamic of what that creates. I mean, we've talked about it before. The high FEV, low float tokens with lots of potential supply coming out in the future. It spooks the market. It certainly has been recently, and you've seen some of these tokens have been the biggest underperformers in the market as the supply has come online and the demand has kind of dried up. So it's just been a different environment.
Any more big? You're looking at that list on the right there. A lot of these were pretty telegraphed with bigger projects, big VC funding. Any other big ones on the horizon, or have most of these come to market at this point?
I think that was pretty much it. ZK Sync was really the last one, and Layer Zero were the last ones that I had in my mind that were the big anticipated launches.
Okay, so potentially a little bit of a supply change there as well.
Yeah.
So moving forward, any specific projects, anything else that looked really interesting to you right now?
Yeah, Polymarket was really I think the main notable app that people were talking about this month, and I think it's notable for a few different reasons. I mean, I was seeing this on the news on my feed outside of the crypto world. This is a betting market app where you can kind of create your own betting market, and then traders can go and choose what outcome they think is going to happen. The main source of popularity of this has been in political markets. So obviously with the politics stuff ramping up in this past month, there's been actually a fair amount of volume on some of these markets. The prediction markets for political stuff has existed before. There's websites like Predict It. I forget what the other one's called, but they've really never done very much volume. And Polymarket is hitting like $100 million of volume on just the main presidential, like who's going to win the presidential election market. So this was getting cited all over kind of the news media as evidence, especially after the debate of Joe Biden's poor performance. And just in terms of kind of framing this in a crypto standpoint, a lot of the other crypto apps that have kind of made it to mainstream, where I'm thinking like Axie, maybe Friendtech, some of the ton clicker games that have gotten traction recently. All of them are paying you to use them basically. Whereas this one that's not the case. This is just kind of a superior app to what exists, at least in the US. some of those political markets are more heavily regulated and they're hard to get access to. And Polymarket has kind of figured out a way to uh, at least work with the U.S. regulators to be able to get this available to everybody.
Yeah, it's a good point, right? I mean, the other flash in the pans have all been incentive based. There's certainly been some crypto apps that have done well without incentives, things like, Uniswap, things like, even just, wallet usage like MetaMask. But yeah, you haven't seen a lot of this organic growth. Obviously, a lot of it's skewed because of the presidential election. So it'll be interesting to see if these kind of volumes hold once the election dies down. But is there anything actually unique from a blockchain perspective about why, like you said, prediction markets been around forever? Like, is there anything unique about the blockchain-based prediction markets that make you think that this is going to be, a trend that can continue?
The biggest thing would be just the ability to arbitrate uh like whether something is actually true or not, whether the outcome happened or not. So, you could see in a world where there's a really big prediction market that whoever the arbitrator of the market is, whoever chooses whether it was actually right or wrong, goes rogue if they have a huge financial incentive to do so. Whereas when you have a blockchain, you can at least have some guarantees that that's not going to be the case.
Great. Well, we'll definitely keep our eyes on that. What else? Any other sectors or specific projects that are getting steam right now?
Yeah, nothing really to say too much about this one. This is real world asset, tokenized treasuries, just ever popular. You can see at the top there the BlackRock spittle or from Ondo Finance there that has been gaining a lot of traction recently. But yeah, just overall, I mean, this has clearly been, and we say it pretty much every month, but stable coins are the crypto product with product market fit, and that continues to be the case.
Yeah, I will, just from a market standpoint, maybe more narrative than substance, but Ondo, the price of the Ondo token, pretty much tracking pretty carefully the growth in assets at BlackRock's build or BUIDL tokenized product. So, one of the things we always talk about in investing is it's enough to find the investment theme. It's even harder to find the right way to express that theme. Finding for example, a way to play the growth in stable coins has been really hard, unless you're a Circle equity holder or work at Tether. Not sure there's really a great way to bet on that growth. But with tokenized dollars, sort of the same thing, but there have been some proxies, things like Ondo, things even, in some ways like Maker, that are certainly tracking the growth of this sector. Keep rolling. What else? Anything else specific to?
Yeah, so this is Pump.Fun. I think we talked about this last month as well. This is a meme coin launching app. The notable thing here was, I mean, this has been the most popular thing in crypto recently. It actually eclipsed the fees that were paid to Ethereum on one day, which is not something I can remember ever happening with an app before. So, this has been the main source of activity going on in the last few months, and it continues to roll.
What happens to Pump.Fun? I mean, again, just speaking of flash in the pans, is this sustainable even if meme coins are not super popular? Like, is it just like what are the use cases of launching tokens on Pump.Fun other than just meme coins? Or is that it?
I mean, it doesn't have to be a meme coin you're launching, but I'm not disagreeing with you. I think that this is probably one of the more flash in the pan types in my mind.
Yeah, well, certainly real revenues during that flash in the pans will be interesting. We've seen that before, companies and projects that do something that generates a lot of revenues and then maybe it stalls out. So it'll be interesting to see if the team behind here can pivot into something else and use some of that money. Okay, keep going. We talked about stablecoins a little bit. I know Athena continues to do well, one of the more talked about stablecoin or money market type competitors out there.
Yeah,
Given
since I've been in crypto, it's really been DAI that has been the decentralized stablecoin of choice. I mean, you've had a few algorithmic stablecoin competitors, but if you think about the stuff that's actually been stable and been kind of perennially in the industry eye, it's always been DAI. USDE from Athena has really kind of been catching up to that. I mean, maybe a quasi algorithmic, not really. It's a little bit different mechanism, but I would still say kind of more similar to DAI than some of the other products that had ever been on the market. But yeah, really starting to catch up. Clearly, they've got this big marketing effort, big kind of tokenomic incentive effort, and yeah, they've been on fire recently.
Yeah, and a good market for Athena as well. I mean, basically just taking advantage of the basis trade. I mean, that basis is going to continue to exist, especially with the ETFs creating this demand in Bitcoin and ETH. So seemingly pretty easy product to, some of the problem with these yield type products is they just don't last long enough, right? The market conditions change, but this one seems like it has some staying power as well.
Hmm.
Moving on, I want to ask you about this. We put the slide together because, as you know, my team has pitched me multiple times on modular blockchains. I've been told to buy Celestia. I never understood it. Still don't understand it. Like, what's happening here?
So Celestia, admittedly, it was very early when the token launched. There wasn't really much built on it at the time, and what you're really seeing is a lot of networks start to use it. So Celestia is basically a place where you post as a blockchain, you post data, and that allows you to have much less storage that you need, which allows you to charge a much lower fee to users. So we see something like layer twos on Ethereum. A lot of them are now posting data to Ethereum, and if you've used a layer two recently, you can see it's very noticeable in terms of the fees. I mean, if you're on an Optimism or an Arbitrum now, that used to be $1 that you would pay for fees. Now it's like a cent. And part of that is the market environment, but a lot of that is the fact that they're posting data. So all of these blockchains here or applications that are posting data to Celestia, I mean, you were talking about a 100x, decrease in the amount of fees that they're paying just because they're able to more efficiently store their data. So you've seen some really massive growth. I mean, you're talking about 10x growth here in the amount of data that's being processed by Celestia. And, given the amount of partnerships they've had recently, the amount of customers that have been interested in using them, I don't see that stopping anytime soon. It's really just a pipeline of projects that are interested in using it.
So obviously, the end user benefits the most here in the form of decreased fees. But from a investment sense, who really benefits the most from this?
Um, so it's hard to say. In a pre-Solana time, I would have agreed with you, where I would be skeptical about the value capture here. There's not a lot of fees being translated into Celestia right now. Uh, it, but now that we've seen Solana, I think be able to kind of take that narrative and make it up on volume and be able to reach, real, very close to sustainable levels of fees based on just volume and very, very low actual cost. I think we can, at least in my mind, I give more credence to the ability or to the idea that the TIA token holders can still ultimately benefit here as, the growth ramps up.
Okay, so on a less dense note, it wouldn't be crypto if we weren't talking about some meme coins at least. Um, you know, I've seen, at least on our desk, especially a lot of the younger ones, really getting enjoying some of the political uh, tokens that are out there, especially with this, will he or will he not drop out of the race? What are you showing here?
Yeah, this is a meme coin called Joe Biden, GE or JEO Biden. Um, it's obviously a play on Joe Biden. There's been a few of these political meme coins that have been around. But this one it had run up, extremely quickly. This was the narrative du jour for I think most of May. Um, but it was interesting because this was really very reflective of what was actually going on in the debate. You can see right in the middle of the chart there, that was the day of the debate. The token dropped 70% on the day, and there wasn't really a lot of other ways to speculate. I mean, Polymarket was the other big one, but to kind of speculate or implement into your market view the impact of that debate on the political the political odds. And but you could see that with the Bowden token, people really did integrate that into the value.
And I know most people will dismiss this as kind of a joke and everything, but I want to make it clear, like equities are doing the same thing right now. Like the equity market has become largely a casino, right? And no matter where you look, gambling revenues are at all-time highs. You know, poker is, more popular than ever. But the equity market is basically a giant casino as well, not just the meme stocks like GameStop and AMC, but overall in general, you're seeing just volumes in the equity markets from retail higher than ever, turnover higher than ever. You have these daily expiring options that are, the definition of gambling, exploding in volumes. It's clear that the market in general, or just society in general, likes to gamble. And while in the early days of crypto was dismissed as just a casino, and now obviously you have to walk that back because the equity market is becoming the same thing. The difference is the crypto casino is actually placating to things that are actually relevant in the cultural mainstream, right? The equity market wasn't open during the debate, and even if it was, you're not playing GameStop or AMC or Apple based on Biden's performance. The fact that you mentioned Pump.Fun, that you can spin up a meme coin, making fun of Trump or Biden, and then actually have people to trade on it just for fun. Yeah, maybe a small little niche corner of the crypto market, but clearly there's demand for it. Clearly people have fun doing this. I'm not going to stake my career on crypto because of the growth of meme coins, but as one of 10 or 12 sectors that are happening right now, people like it. People want to trade it. People have fun with this. So I don't see a lot of harm. Again, as long as people can compartmentalize the difference between a Bowden token and something like an Ethereum or a Solana or a Uniswap, just like they do in the equity market, where they compartmentalize AMC and GameStop as being sort of, these weird meme stocks, but it doesn't take away from the rest of the equity market. So little lighthearted way to finish here, but I think of this as a good thing, in general, just giving the market what it wants and being able to have low barriers to entry and quicker to market tokens that represent the views that people want to take. So with that, I think we'll leave it here. Any parting thoughts here, Nick, on the markets or what you're seeing or how people can reach you?
No, nothing, that but I'm thinking, I'm on X, Twitter, at Nick_Hotz.
Great. And obviously you can find any and all of the educational material that Arca puts out at any of our websites or social media sites. You can reach me on Twitter at jdorman81. And we'll be back again next month, hopefully with a little bit more positive price action to back up some of the positive things that are happening in the market. So thanks everyone for listening, and we'll see you next month.